Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so, this is Ticker Requests Live, which I try to do every Sunday at 9 p.m. Eastern, taking ticker requests, going over the charts live, maybe diving into some unusual whales, options, data, stuff like that. So, welcome. I do try to do this with a drink, and I'll wait to cheers until I see some people in the chat. And yeah, it's kind of an odd day with a daylight savings time. I was expecting to have another hour before doing this, so I started a little bit late. But one thing I did want to do before going over the charts, I did get a comment on SoundHound. So I might dive into that, but if there are requests, I'll go over those. But I did just want to mention, I feel like I should do this every week, just going over the what's on the channel, the videos that I did last week. So I did just put out a video yesterday on Plug Power, so right there. Yeah, I think it's a really good video. Dive into this one order in unusual whales that stood out to me as being pretty bullish. And that is actually a pretty nice compliment to this GameStop video over here because I actually made a mistake in that GameStop video. I saw what was selling to open calls. I didn't really understand that, and so I thought it looked bullish. I changed the thumbnail, changed the title because it was selling to open, so effectively selling covered calls. So that is probably a little bit bearish, but I do think that we are going to be getting a bounce in the market. But anyways, from what I learned in that video, I kind of applied to this plug one. I think that looks like it could be going to two, if not, higher in the coming weeks. So I'd recommend checking out those two videos if you haven't seen them already. I did just post this little channel update video. Really just, my schedule at work is changing, so my pre-market preps for the next week will be live, and then the week after they'll be pre-recorded and just kind of, going over stuff on the channel. I meant to make it short, but it's about a 10-minute long video. And then I also did just do an update on AMC 291, a very key level to be holding. And then it looks like, between this week and last week's Ticker Request Live, I did put out a video on Marathon Digital as well as another one on AMC. And then it just looks like a couple pre-market preps in there. So yeah, I'd recommend checking out all of those videos. Lots of fun. And yeah, but I will be going over more tickers during pre-market prep tomorrow. But anyways, I'm just going to come back to the charts so we can go over SoundHound, which is ticker symbol SOUN. And yeah, I feel like this is looking pretty bullish, but there was a comment on the channel that was actually pretty extensive. So I might pull that up and we can kind of walk through that together, unless I do see that somebody has joined. Then I can go over their request instead. But what I might do is just go over to the channel over here. I tried to catch up on all of the comments. So hopefully, my responses were okay. But yeah, this is kind of a, read more. This is an extensive comment. So this is on SoundHound. I might just read it to us. And so I'm just going to like this, and then I will go over it. So did you notice that SoundHound had a, let's see, $16,000. And so I would say that $16,000, that's really not that much money. And I feel like especially with a stock like SoundHound, because I feel like the premium on SoundHound, or yeah, the amount traded has been fairly impressive. And so that's a call for the monthly July, and then this was from last Saturday. So let's see over here. I can so let's see. Oops, just flipping around. Did you notice that that had a 16,000? So let's see. So I'm just going to go to the custom flow. This is from the plug video that I did, and I will do SoundHound for the 7th. And so this is, let's see, 16,000. I wonder if they meant 160. And so that's the, let's see, $11 call for, yes, so I do see that one. And on, yes, and again after, so February 14th. Okay, so let's look at that. I don't know how well I can dissect this. It's a lot of information. I don't know, ADHD brain, or maybe that's offensive, ADD. I need like all sentences to be kind of spaced out. So I do see that one. Yes, again, after February 14th, I see both. So those, and I might actually, I want to start replying, but I don't want to like obscure what we're seeing here. Do I? Okay, so I see the, oops, 165K order from 3.7 going over at the beginning, oops, of ticker request live. And so, and again, after February 14th, I keep switching back. So let's see. February 14th. So I'd have to go back in time for that. So let's see. Let's just filter this to only February 14th. Looks like there are a lot of orders that were above 100,000. That's what I got filtered here, just above Ed's head. You can see there are 100,000. So from the 14th, $11 call right here. That looks like, oops, gosh. Let's see. I see both were closed to ask, which means buyers aggressively pays the ask. So let's, look at this one. And so for February 12th, for that day, let's scroll here to, February 14th. So this, that looks like over 3 million, almost 4 million for that candle premium. It's 10 minutes. And let's see. That was at 9:48. Gotta adjust this again, dang it. So let's see, 9:48. So that matches this. And so for that day, it looks like it's kind of 50-50. I'm not sure. So I'm just going to look at the one from the 7th. Otherwise, I'll spend way too much time on this. So let's just look at this contract. This is the data from Friday, from the 7th. And we can see this big spike around, let's see, that was around 103. So over here, that's 10. So what strikes me as being more exciting is not this 1024 order. It's both the same contract, but is this same $11 strike call for July 18th. And that was at 105. So that's this one. So it's both of these. Both of those look like they were buys. But the tough thing about this is that open interest, Ed's in the way, so I'm going to get him out of the way. Open interest prior to yesterday, or, on Friday, was 32,000. And so half of that volume was traded, or half of the open interest was traded. So you don't know if that's, it could be, let's see, selling covered calls, or it could be buying or selling calls. So we'll have to see what the open interest is tomorrow. But I would think that because these candles are green and because the call premium, the net call premium has been going up, that suggests to me that there's more buying. And so let's see what this person was suggesting. I see both calls were closed to ask, which means buyer aggressively pays the ask. And so I'm just going to say that it looks like net call premium increased by, let's see, the net call premium for this day increased by nearly 3 million, which makes me think that the open interest should increase from 32K to, is that 48K? Or no, it would be 50K. So we'll have to see tomorrow morning how that open interest changes. And hey, what's up? Yeah, I'll definitely check out Gari Network, which is cryptocurrency. So I'll definitely do that. I'm just going to try to get through some. This is just a very long post, but I think it's pretty interesting because it does look, further more bullish. Multi-million-dollar trades, SoundHound's unusual whale, and it's possible. I might have to rewatch that video because, yeah. I'm not sure because I've been mistaken about the direction or whether things are selling to open or buying to open. And so I would assume the seller has more power to control the stock price, just like what happened to the $20 put. And so in all honesty, this is just too much information for me, so I'm not going to be able to get into it. So I'm just going to write generally. I have been thinking that the chart looked pretty bullish. But yeah, we'll have to see how that OI changes in the morning. So hopefully this person can see this. It's just a little too dense for me to get into. And because if I do get a comment like this, I'll either take weeks, maybe a month to respond to it. I did respond to a few comments today, maybe yesterday, that I hadn't responded for a month just because they were about a ticker that I wasn't as familiar with or hadn't looked at in a little while. Excuse me. Or I just don't have the time to dive into that. It's like I either spend time doing stuff like this or I spend time making videos. So, yeah, so hopefully that is helpful. And, but then I'll just come back to the studio and maybe I'll come back to the channel there. And yeah, I got SoundHound up here. And so just briefly, I had been thinking that it might come down to 8 to test this 200-day moving average, which is currently at 826. But, we came down to 849, getting pretty close. It's kind of like a tease to anybody waiting for that 200-day moving average to get pierced. We didn't get that. And then we did get back into this falling wedge that I've drawn here, which is, potentially, kind of hand wavy. We are below that purple line there, which is, I believe, at 1025, which corresponds with the high from over here from Pi Day from 2024. So kind of revisiting that a year later. It's kind of interesting. But yeah, I just kind of viewed that as, cup and handle. And then we broke out from, and then we're kind of retesting, but we are below it now. So maybe that does fade lower. Yeah, so I would like to see SoundHound reclaim 1025. But if that doesn't happen, it's maybe potentially bearish. But that order that we were just looking at, over here, that is, the premium from Friday, $3.6 million traded on the day with one candle. Let's see, I guess the first bullish candle was between, I can adjust this to 1 minute candles so we can really see where these orders were. So this candle, 1 minute time frame between 10:24 and 10:25 a.m., we saw candle premium of over $1 million. And, all of that was on the ask side. So that suggests that it's buying to open call. So there's no selling covered calls there. That's just buying these contracts, from what I understand. And that volume is over 5,000. And then this 1 minute candle over here looks like it's nearly $2 million. $1.95 million candle volume of 10,000 contracts. So overall, about 15,000 contracts that seem very clearly to be going long. About $3 million going long there. This candle, 100% on the ask side, 10,000 of them. So that does make me think that, the whale is buying some more. And that is, reflected here in the chart that is bullish, that it is buying, because we see net call premium increasing rather than it decreasing and going negative. That's suggesting that, I hold a bunch of shares and I'm selling covered calls because I may be potentially bearish over the next 4 months to get into July. So I think that this is, quite exciting for SoundHound. And then looking at the data over here, I'm going to bring Ed back because he's not blocking this. And so the one that I had been looking at is the $25 call, the strike for $25 that expires in January, about 300 days to expiration. I just like to have a little bit of buffer because, I'm still, getting to know contracts. And so the benefit of this one over the other one, this one, the premium is, between $110 to $130, or, 110 to 130 times 100 is, to buy one contract is $110 to $130. Whereas if we look at the other one, that is, a low of 168 to a high of 216. And there's also more wiggle room between now and expiration. This one, it's about 4 months to July. The strike, $11, that's a little bit more reasonable versus the $25 strike, but there's a lot more time. But if we do look at the chart, why did I pick 25? 25 was the high from over here. So the high from December 26th was 24.95. So I don't really think 25 is that unreasonable of a target for something like this. So personally, I have a couple shares of SoundHound. The reason why I got a couple shares is I just didn't have enough cash on the side, and probably don't have enough cash on the side to be buying calls. But if I were to establish a position, a contract, it would probably be the $25 call, $25 strike call that expires in January of next year, just to have that wiggle room. And because the chart does support that, 25 is a feasible level to be getting to between, 10 months to expiration, basically. So I think that's pretty reasonable. So hopefully that's helpful. But I will go over to Gari Networks. And Saul's here. Happy Sunday to you as well. And you are requesting qubits and Applied Digital. So I'll definitely go over those. But before I do that, I need to take a look over at Gari Network for Disclosure Crypto. He had that request while I was going over the other stuff. And so I'm just going to pull that up over here, but then I will cheers you guys because I need to do that at some point. And so I'll just pull up Gari Network. So yeah, I don't know which one I was looking at before, which one I've got doodles on. Maybe it was that one. Maybe it was Kraken. Yeah, I guess I got a lot of doodles on this. I don't know which one is better. But yeah, I mean, I feel like generally I might just go to the other one because it's a little less cluttered. I don't know if this is. It's trading around 0.4 cents. And actually, I mean, this is really just doodle, so I might actually pull it up on the other one, which is on Kraken. So yeah, I'll reevaluate this, and I kind of want to just clear all those drawings. But generally, I think that Bitcoin could be heading lower, crypto could be heading lower, and it might actually be good for me to just kind of put this into context with what I see going on with Bitcoin, and that might relate to the alts. But generally, I think it's kind of a risky time for alts. I think that they're probably going lower, which is really just like discount buying territory. But with some of the more, in my view, speculative ones like Gari, they're just going to be more risky. But anyways, before I get into that, cheers to you guys. Cheers to Sunday, the weekend. I'm super excited that I've been working 12-hour shifts the past like 10 months, and I'm on 8-hour shifts now, which tomorrow will start in the afternoon, go into the evening. So I probably won't have an evening video for you guys. And then, but I will have a live, longer format pre-market prep. So that should be nice because I don't have to go to work in the morning. But then next week I'll have to work in the morning and I'll be free in the afternoon. So I'm just really excited about the schedule and daylight savings time. I spent some time working on cutting down a tree today, which is kind of an ongoing process bit by bit, and started taking off some siding. So feeling good, feeling productive, but I am exhausted physically. But that's, it's a season. I'm feeling good, feeling strong. So cheers to you guys and the start of another exciting week. Cheers. I made that one well. Last week I made it a little too strong, so I tried to be cautious. I felt like I didn't have enough juice in there, but yeah, it's nicely flavored, not too strong. But okay, so let's look at this. I'm just gonna kind of clear my doodles from here because it didn't do either of those things. Broken down to these new lows. Yeah, I'm just gonna get. I mean, maybe that yellow line, it's not overwhelming. I'll leave that there. But yeah, so we got this parallel channel, which seems like, I don't know, what pivot points is I looking at? Oh, I need to check. Am I in regular or logarithmic? Logarithmic. Okay, I was wondering, like, why is that line, odd? And so I don't always look at cryptocurrencies in the log scale. Usually I just look at, like, in the pre-market preps, I go over Bitcoin. That's not the log scale. And like really the closes in Webull are not as good as they are, in TradingView. So yeah, I mean, all just approximate, but I mean, this does seem like you got the parallel channel there. You can pretty clearly see. I might be able to adjust this a little bit, just thinking, like got some wicks up there and then that. So yeah, I mean, this makes me feel a little bit better. I mean, how did I have this before? Okay, so that it was like, one touch point over here and, over here. Yeah, I mean, that's not like a close or anything. It's just like a wick up there. So it's pretty arbitrary how I had that drawn before. Let's see if I can back. Do I need to do this? Oops. Nope. Let's see. I just want to like undo what I did. Or redo? Reset chart view. No. Okay, so I'm just going to manually do this again. Just kind of eyeballing it. So I'm just going to bring this one down. And actually, I think I wanted to do it like this. So it's like slants it some. And so, yeah, I mean, this got a touch point right there. And, touch point over there. So there's just a lot more, pivots from that downtrend at the top. So I think that's a little bit more legitimate. And then if I move this one up, it's just stay in parallel with that. We did get, a little bit of hanging out down here. And we nearly got to it over here. So maybe, I mean, maybe this could be, I don't know. I don't know how much I'm moving this around. Yeah, I mean, now that's like, I mean, this is all, easy to fudge stuff to get what you want to see. But I would think that, because it's kind of got this consolidation above there before the big move and like a near test over here, I think that looks pretty good. And let's see. I mean, I could move this up or I could move it, to touch this over here. Yeah, I mean, I don't know that I like that. So yeah, I mean, anyways, it does look like it could potentially be broken down from here. So I think it's, the I don't know how low it could go, but yeah, let's see. I mean, if like, let's say that is the bottom. I mean, this looks pretty good. You know, got multiple touches there. And this, you know, it's like, I don't know. Let's keep an eye on that midpoint. Where does the, I think this actually looks, I mean, because, you know, the midpoint of that channel got some consolidation right around there, hand wavy right around there, also around there here, as well as here, also around that midpoint here and here. And then we got multiple tests of the base of that, and it looks like we're right around the base of it. And then this didn't get up to it, but we do have a lot of touch points up here. So maybe it's at support, but I suspect it, as well as other alts, are probably going down. But I don't think that we're in a bear market or anything. I think that we're in the shake out the weak hands period of a bull market. I think that based on the the Bitcoin cycle, the 4-year cycle, we had the halving last year, and so I mean I might. So I hope that's helpful with this. I mean, I think that from 0.4 cents, I think it's probably going lower. But if it is, if you were bullish on it up here, I don't think there's any reason to not be bullish on it down here. If this is to last the bull market, if this is not to be shaken out, I have no idea. But I feel like, my alts, I'm continuing to add to them. And that's, I'm not adding more aggressively. I'm just doing my normal daily DCAs, which, if you're curious, for alts, daily $5 Doge, daily $5 Ethereum, and then I just do $1 of a handful of others. And then I do $5 of Bitcoin every day. And then I have specific levels that I do $10 for Bitcoin, but I'll more aggressively buy if that comes down to around 70 or 69,000. And by more aggressively, I mean a lot more aggressively. So as far as this goes, I mean, and for me, if Bitcoin does come down to like 69,000, I'll be more aggressive with Bitcoin. And then I'll probably reevaluate like my Doge and some other higher conviction alts that I have. And then I might add more aggressively with those as well. But some of the more speculative alts that I have, I put $100 into them and I'm just, forgetting about them. And so if I do look over at Bitcoin, just real quick over here, because one of these, maybe it's the Coinbase one. Nope, not that one. Oh, yeah, I did mark halvings on this. And so, this halving was in May of 2020. And then, we moved up, but it didn't really I don't know, I guess it started to go like parabolic into getting into 2021, like over here. But we didn't see all-time highs until the year after. And so this is April, and then over here, this is November. And so here, we have the halving. And, we hit the new all-time highs in December of 2024, and then in January of 2025. I feel like from this halving, I mean, look at this. The halving here, and then parabolic to the upside. Halving here, and then we got a little bit of a move to the upside. I think that there's still a lot more to go to the upside. And so I don't really cover Bitcoin too much on this chart, and this is on the log scale. I normally do it every morning for pre-market prep. Let's see over here. And this is linear. And so one thing that I have been paying attention to, and I'll just give him a shout out over here. So my subscriptions, and by the way, I started watching this before the stream. I haven't finished it. So I plan on finishing this after it. So I'm excited about that. Ooh, Last of Us Season 2. I love The Last of Us. I didn't know about it before the show started. Super stoked about that. This will be an interesting one. Orlando. I'm kind of a new follower of his, so that'll be interesting to check out. But what I wanted to mention is Crypto Rover. He does a daily video that's about 10 minutes long, pretty easy to watch. And every single weekend, he talks about the CME gap. And we can actually just check out what is a CME gap. And so on Bitcoin charts, CME gaps are found by comparing the price levels at which the Friday close and Monday open differ. And so these gaps are frequently noticed by traders because they might later serve as support or resistance levels. So are there multiple variations of Bitcoin CME gaps to explore. Whatever, we don't need to get into those details, but effectively, what he goes over in this, he does mention it, I think in probably the Saturday video as well, but the CME gap. And so I looked at so this is from, let's see. Oh, crap. This is from the 8th. I needed it for the 7th. So the CME gap would be from 4 o'clock, 6, 9. Sorry, I'm dyslexic. I don't know if I am, but the way that I read that was a little bit. So this is from, let's see, 4 o'clock. So I want the close for the candle from the 4 o'clock. So that's when markets close Eastern time. That's when the CME gap begins to be formed. And so that price was at $86,953.10. So 86,953.10. So I'm just going to adjust this one. 86,953.10. And so that's a CME gap. And so what I did like an hour ago, these are the 1 hour candles. What I did an hour ago was I just bought 10, I do my normal $5 DCA of Bitcoin, and that's just for stacking. But what I did, and that's in my Strike account, because I find that Robinhood fees that are hidden a little bit, they make my buys more expensive than if I just buy daily dollar cost average with Strike. So that's what I do. And so I just bought $10 worth of Bitcoin like a couple hours ago, because, kind of on that thesis, which Crypto Rover always talks about. And so I was just curious to see, will we fill up this gap? Basically just do what that arrow's doing. Oh, actually, no, it's going even higher than that. So what I might actually do is just take a measurement. So I probably bought around, I think 81,000 was about my average. And so I could get, 5% swing, $10. That's 50 cents. It's nothing too crazy, but it's just kind of an experiment for me, following the CME gaps and trading them. And actually, it's higher than that. It's up here. That's a 7% swing. So, we'll see. But I think that this sell-off that we saw over the weekend and probably across a lot of cryptos will probably be recovering that in the first few days, Monday, Tuesday, or Wednesday. But yeah, maybe not. So I'm not really, it's $10. It's just a little bit of an experiment. But I've heard that, Crypto Rover went over this, and others have as well. Let's see. I want to get over to the daily. There's a lot of liquidity up here. A lot of people had leverage short, I believe. And so I think that they might get squeezed out, coming up to around 100,000. But then I think that might be a bull trap, and then we sweep some lows down here, and then we start to go higher, so just maximum amount of pain across the board. So effectively, what seems like it will be happening is, from where we're at, we'll go up to maybe 100,000, something like that, then come back down into this box somewhere, shaking out people who are over short and over leveraged long, and then we start making new all-time highs. So that's kind of, what people are, what I feel like could happen. So that's what I'm prepared for with Bitcoin. But sorry, I've just been rambling a bunch about that. And so I got to go over Qubits and Applied Digital. Oh, CPI is on Wednesday is what Saul's saying. So yeah, that'll be good to pay attention to. I'm going to open up a new page in my, in my little, I got a little journal over here. It's nothing. It's just pieces of paper, basically. I don't look at them. But Wednesday, CPI. So I got that at the top of the page. And so I'll probably mention that during pre-market prep on Wednesday. But I probably won't have too much insight on it other than, relaying what people like Gareth Soloway are saying about it. And then Benjamin, what's up? How's it going? FLNC, I'll throw that up here. I do have to go over Qubit and Applied Digital first, but then I'll get to FLNC for you. Which I think I went over during a pre-market prep. And so, I think that did go up the days. For me, it's like across the board. And I don't know if that was, I think that was Friday. I'm just like, I think it's really good to be nimble with positions. So like I have more positions that I probably want, and I have more contracts, calls that I want. They're long dated, so I'm not too worried about them, but I'm just trying to get into, out of a lot of positions so I can just have cash on the side so I can deploy it when I feel like we're either bottoming or topping. I feel like we're probably near bottom in the markets, but I don't know how all the different stocks will be responding. So it might be a little bit different. But anyways, I don't know if I cheers to Benjamin and everybody else. Thanks for joining, and happy Sunday. I got to make sure I take sips of that, otherwise I won't drink it. But so let's go over qubits here. So I maybe went over it last week, not really sure. It looks like this retracement here. We have gone through the 50%, so I'm just going to remove that so it doesn't clutter it. And close that. And so this, let's see, I'm not the best at volume analysis when things are going down. I think I'm better at it when things are going up. But I think that one of the interesting things about charts is that, you can just kind of like inverse things and they work the same as far as I understand. So like over here when we were topping, we went to a higher high, opened, closed lower, put in a bearish engulfing candle. Also volume came down between those 2 days. So that showed some weakness. But, following that with these down moves, with these downside moves, volume didn't really increase that much. It stayed kind of low. So that makes me think that, maybe it could be finding support around 482, around that 618. That's horizontal white line there. But then when we look here, we see this big green candle. And so price goes up and volume's just kind of flat. Nothing's really sticking out over here. And so, let's see. If volume's going up as price is going down, that makes me think it's going to continue. We have 1, 2, 3, 4, 5, 6, 7 red candles, a 7 count. I don't know how significant that is. And with that, we see volume kind of drying up. Then we see a bounce, but on low volume. And then over here, we have pretty low volume as well. It's just like there are no buyers. Maybe because earnings is coming up on the 13th. So that's on Thursday, I believe. Yeah, that's got to be Thursday. But let's see. Okay, maybe we can look at the bigger picture here. So we've got higher lows, or from here, higher lows. How's the RSI look? It's, higher low, and RSI over here was 3907. RSI over here, the low, was 4019. So it's still, there's not necessarily divergence there. It's kind of weak bullish divergence because it's like flat here. But then what we could look at too is the highs. So here we have lower highs as well. So there's no divergence that could be bearish. So yeah, I feel like this is really tough with earnings coming up. And so I guess I'll just put it into context. If I did not have a position in this, I would not establish a position with earnings coming up and the signals, in my view, just not being that clear. And with the signals not being that clear, that makes me lean more on the bearish side than the bullish side. And the reason for that is because this was a rejected move to the upside. And following that, we saw this pullback and then consolidation. So that makes me think this could be a bear flag. Just very little volume here. So like any buyers that push this up, look at how weak that was. There's just like very little volume behind it compared to like over here, you know. So I think that like the buyers have kind of just been, you know, dried up. And so I would think this is probably going lower. I would think that the response to earnings would be to the downside, but at the same time, I could be completely wrong. And so we have the 21-day moving average at like around $6 and the 50-day moving average at 650. And so I would think those are two levels that, you know, maybe if it bounces around earnings, it could get rejected from those levels. And so what I would do is just do a Fibonacci extension. So going from the top here to the low here, and then back up to this high. And so what we get is a measurement from the top here to the bottom here that gets extended that same distance from here then down. That's a 100% extension. And so that 100% extension would put it around $2 a share. Do I think it's going to $2 a share? Not necessarily, but with the 200-day moving average around 280, with the 786 around 3, both of those levels right around 303 for the 786, I feel like this is more than likely at this point, because it's consolidated following this move and there's just no volume behind it. I think it's more likely to go down to here. But maybe it would like bounce from there. But one thing that's maybe a little bit interesting that maybe we could do is, I think if I move this up to one of those moving averages, it will drag that 100% extension up a little bit. So let's say, I'm actually going to delete that arrow. Let's say we move up to the 21-day moving average. Okay, that makes it a little bit more reasonable rather than sub $2. Getting up to the 21-day, that's above $2. Okay, if we go up to the 50-day moving average with, and I'm just going to make it exact, with that third point at 650, that puts us at, that 100% move puts us at 273, which is pretty close to that 200-day moving average. So what I could see is maybe a move up to 650, just like it's drawn there from that Fibonacci extension. So maybe something like this, and then a rejection down. So that's what I could potentially see with this, coming down to those levels, and then maybe it'd find a bottom. And so that might be a little bit misleading considering, you know, what I had kind of drawn, I think last week on this. But so last week, when I did the last video, that was following this candle here. And so, yeah, I mean, I could be wrong in both directions. I can be right in both directions. But just really like with the volume here, I'm not too impressed with it. With this big, I mean, on the 4th, so that was Tuesday, I believe, went up almost 9%, 8.57% on the day. That's a pretty nice green candle, but it's like super faded. And like this is a hanging man candle. So let's look up the definition of hanging man. Hanging man candle. And so that is, you know, what's a credible source here? Let's see. TrendSpider. I follow TrendSpider, but I was kind of looking for, you know, so just something like this. You know, this is a hammer candle at the bottom, goes up. Hanging man candle is also a hammer candle, but it's at the top and it goes down. And so I feel like that's kind of what we saw here. And then we see a pullback, big wicks to the upside, and even we see the volume is stair-stepping up ever so slightly. as it closes lower and lower. So that makes me think it's not looking too strong, but yeah, I mean, so I feel like yeah, I mean, I'm gonna stick to this. I find that pretty compelling, the 200-day moving average. Maybe it doesn't get to the 200-day moving average, but I think it could come down another $2. So whether I'm right or wrong, I think it's just good to have a plan for that. I think it's good to, if you're long term and this goes from here and then bounces higher, if that's the thesis, then I think it's good to just have a plan to be able to buy at $3, or if it doesn't go down to 3, to be able to buy at 4. And so just to not be FOMOing in if it's going up to, around 650, because that could be getting rejected there before pulling back. So those are my thoughts on that. Hopefully that's helpful. I'm sure I'm wrong in a number of ways with that, but that's just what stands out to me given the volume and all of that. But yeah, I don't need to repeat myself too much with that. But yeah, Applied Digital. So this is one that, yeah, I think you requested this last week. Super cool with the inverse head and shoulders. I did not partake in it. Let's see what's going on here. I have this doodle. I mean, it's effectively followed my doodle exactly. So it's kind of crazy other than this candle here. I'm joking around though. It's just a doodle. But let's see. Yeah, maybe I got 2 doodles there. So let's see. Maybe what I want to do, just remove my drawings. Let's just clean that up. Holding the 200 days. So I think that's good. But volume, with this big move to the upside on the 5th, so that was Wednesday, went up over 11%. This was a good look, spinning top at the bottom there. So that does suggest either reversal or indecision. Like spinning tops are kind of iffy because you got the big wick to the upside and the downside. So yeah, that's kind of a tricky thing, but close lower, gap down, reclaim, closing higher than the close from over here. So that's a good look. But this candle couldn't push it up above here. And, from the sell-off, the highest volume was from this sell-off. On this up move, there just aren't enough buyers. But it is promising that it is holding above the 200-day moving average, which is around 685. 685.1 if you want to be exact. I did have an alert here at 750, and that was for below 750. And so I think that might be like my legacy alert that I had. But yeah, I would say at this point, some stop losses might be nice if you're going to be going long. So the low from the 4th was 630, and the low over here is 612. So, and then over here, 594. So, like 594 could be like, stop loss level, because then this is kind of odd because it looks like maybe there's a head and shoulders pattern here, but this wick kind of negates that. But anyways, let's throw up my drawings, see what we got here. Yeah, so that drawing, all my drawings, just like the doodles, they're all doodles, nothing's perfect. But so for this light blue uptrend that I have drawn there, got some wicks going below it over here, but it's based on the close from that day. No closes below it. We did open below it one day, but we're still respecting that. So I just keep in mind, nobody's going to be able to, just because my drawings can be a little bit wonky, nobody's going to be able to draw my levels, trend lines exactly the same. But that 200-day moving average should be the same on your chart, 685.1. And so I just look for it to keep closing above that. If there's one close below it, look for a secondary close to confirm the breakdown. But if there's one close below it, look for a close to get back above it. Maybe that was a fake out. But yeah, I think that 630, 612, and 594 are all good levels, valid levels to have stop losses at. Because like over here, 594, if that was a stop loss, we didn't hit it. 612. Okay, if 612 is a stop loss, have we hit it? No. This is higher than that. The low from the 4th was 630. So, we're still putting in higher lows. So, while it is looking a little bit weak here and volume is coming down, so I don't really like that, it's still putting in higher lows. So, I say that this is leaning more bullish, but it's getting kind of in the gray area, and I could see it. I could see it breaking down. So keep an eye on that. Keep an eye on the 200-day moving average. That's what I would probably do. Although, like I had these alerts here, I didn't partake in the inverse head and shoulders play just because for me, it's just not necessarily the stock, but just as far as managing portfolio, a little too speculative for me to partake in it. But I just found that really interesting and compelling to see. But at the same time, this is something Colin Gladman says, which I think is just a general saying. There's nothing more bearish than a failed bullish move. There's nothing more bullish than a failed bearish move. And so if this is an inverse head and shoulders pattern, and we completed the inverse head and shoulders but got massively rejected, that is a failure of a bullish pattern. It is possible, though, that this could start to move higher. So yeah, I mean, if I were to be playing this, I would, at worst case scenario, maybe I'd have a stop loss at 590. But I'd consider some of these lows as stop loss levels to manage that risk. And if it comes down to 690 or whatever it is, then, there are other trades. And maybe you're selling at the bottom before it goes back up to this purple line. But, you got to manage risk somehow. And so that's how I would play this if I was in it. So yeah, hopefully that's helpful. And then I'll get over to FLNC for Benjamin. But I just got to stay hydrated. All right, so FLNC. So this had, on the 7th, a 6% day to the upside when I was being very cautious about it during pre-market prep. I get confused, pre-market prep, pre-market prep, ticker requests live. Yeah, Saul, no problem. I'm glad. Hopefully my perspective is helpful. And also I should note too that, I mention it in, let's see, in this video. I'm sure you guys are all familiar with it, but I just kind of mention that, ticker requests live and really all of my analysis is just like, chatting with a friend at a bar, sharing ideas. That's what ticker requests live is. So that's why I try to always have a drink. And so I am not a professional trader. I'm not an expert at this. I'm just learning. Unusual Whales really helps to inform me. And actually, maybe if I don't get many more requests, maybe I can cycle back to look at the other ones and see what's going on in Unusual Whales. But yeah, I mean, I'm just trying to learn the tools that work for me. And I feel like Unusual Whales is one that once you learn how to use it is super valuable. But it's like there's not one way to use it. Just like there's not one way to trade. Everybody manages emotions differently. Everybody, can draw levels slightly differently. And so I'm still learning with all this. But hopefully, just this second perspective is helpful because, I don't know how it is for you guys, but I don't have many people in my personal life that I can talk to about stocks. Talk to about technical analysis. Really, I don't have anybody that I can go over charts like this with. So hopefully my perspective is a little bit beneficial. But at the same time, I should say that YouTube is a great resource for, getting other people's perspectives. Like I was just talking about watching Colin Gladman's video. I don't participate in all the stocks that he goes over. I participate in very few of them. But it's really nice to just see how he interprets the charts, interprets the market, and how he executes. And he does a really good job with it, whether it's cutting losses that are pretty massive in my view, or, at least as far as, the numbers that he's dealing with versus what I deal with, or, the profits that he takes, and he manages that really well. But he does it in a way that works for him. Everybody's different. What's the meaning of free float? Okay, so let's look that up because I get a little bit lost in the jargon of that stuff and I don't necessarily pay attention to it. What is free float of stock? And so let's see the AI overview from, I believe, Gemini, which is because this is from Google. But so free float is the number of shares of a company that are available for public trading. It's also known as the public, And so how is free float calculated? Free float is calculated by subtracting restricted shares, so that would be only open to, I don't want to say insiders, but those who work at the company, the CEOs, all of that. Restricted shares and closely held shares from outstanding shares. So I interrupted myself. Free float is calculated by subtracting the restricted shares and closely held shares from the outstanding shares. And the restricted shares are held by company insiders, directors, and other employees. And so I think that would probably be like, if the company issues shares to employees as compensation, those would probably be like restricted shares that are set aside for them. And then closely held shares are held by company insiders and controlling investors. And so that might be, maybe the CEO, or maybe that are like a venture capitalist, maybe. I'm not really sure. Why is free float important? Free float is important because it provides insight into a company's stock volatility and liquidity. A high free float is generally considered good because it indicates more liquidity and active trading. A low free float indicates that there are fewer shares available for trading, which makes the stock more volatile. And I would think that would make it more likely to squeeze, and that would make it more volatile, whether that's to the upside or the downside, because if there aren't that many shares, that are exchanged, there's not much of a float of people exchanging shares, then it's like if I have a bunch of shares, if there's a smaller free float, then there are not going to be that many buyers to buy my shares. If there's a smaller free float, actually, yeah, I don't know if that analogy makes sense. So how is free float used? Free float is used, so this is like my trailing off there is just, I'm not as familiar. I don't pay attention to free float too much. Free float is used to calculate a company's free float market cap. Free float is used in many of the world's major indexes. So what is the shares of a company that can be publicly traded and are not restricted? So let's come back to here. So FLNC has a free float of almost 90 million shares. And if I just expand this, we can see what that says. No, it's still just going to be little ellipses there. So the free float market cap is 500 million shares. So it's 90, 90 divided by 500. 90 divided by 500 is 18% of the free float of the market cap is free, I believe. So yeah, it's like free float market cap. So that's 500 million shares are available to the public for trading. But then it looks like the market cap is 1 billion. So the free float market cap, half of that is for insiders or restricted for employees, whatnot. The other half is for the public to trade. And so it looks like, so about 20% is, available for trading. And then 80% is held, I believe. And so what we can also look up is short interest free float FLNC. That's this one. Yep. Okay. So if I do percentage, I just want like an overview from like, yep, this is what I want. Okay, as of March 8th, so Saturday, the short interest percentage of float for Fluence Energy, ticker symbol FLNC, was 28%, according to Fintel. The short interest was that many shares, 18,000. So that's like more like about 20% of the free float is short. 28 of the free float. Oh, 28%. Okay. And yeah, market cap here. I don't know. I'm a little confused, the market cap and the free float market cap. But I think it's probably just like half of the shares are locked up for insiders. But yeah, so with that being around 38% or 28%, anything above 20% of the float being short is considered high. And so, yeah, I mean, I feel like my doodle here going up to that parallel channel, feel like that's still, a possibility. Whatever the 21-day moving average is when getting up to there, currently it's around 713, whereas price is 560. I think that might be acting as some resistance, but if it can like kind of consolidate above it, like form a bull flag, then I think it could be going up higher to around $8 or so. So from current price, I think there's a potential upside of around 40%. I wonder where the 50-day moving average will be at that time, because, maybe this just continues down like that. And then it's, around here. And that would make me think that it'd be topping around there. But yeah, so I mean, hopefully it's a helpful follow-up from the analysis I did on Friday during pre-market prep. And so what's up is that loud work. It looks like if you multiply the 89 million times share price, you get the free float market cap. So let's do that. So let's see, clear this. So the 89 million, yeah. Let's see. I'm just gonna do 90 million because it's 89.64, so pretty close to 90 million. And let's do 90. And then if I multiply the 90 million times the share price, so 560, so times 560, you get the free float market cap. Yes, that's exactly right. And that is 502. So I rounded up, so 504, pretty close. Yep. And the 89 million is number of shares, not price. Yes. So yeah. So multiplying. Let's see. Free float. Yeah. 90 million shares. Yes. The free float market cap will be that number of shares times, the share price. So that's price per share. So I kind of want to doodle something. Maybe I'll open up okay, so I can just doodle on the chart here. So I have a background in chemistry, which I don't do anymore, but I really like to carry units. And so with the free float, that's that price, so that's the number of shares, so 90 million shares. So let's just, oops. I don't know if I can doodle. The better way for me to doodle would actually be for me to come over to here. I know it's Bitcoin, but I can just come over here and I can doodle here. So let's see. 90 million shares, and that's going to be times the share price. So that's 560. 560 dollars per, oops, I'm going to do it like this, per share. And so the shares cancel out, and then you get the market cap, which is in dollars. Now I'm just going to undo all of that. But yeah, that's some stoichiometry. And so that's how you get that. So hopefully that's helpful. It's kind of like a sophomore, junior stock stuff. But yeah, I mean, I don't pay attention to that, so it's always good to refresh. Keep that in mind. And so the coming from Benjamin, the free float market capitalization of FLNC is calculated as follows. Yes, exactly right. Yeah. Yeah, so you use the exact numbers, and it looks like you got the exact number there of 502 million. So, yep, that's exactly right. Yep. So, yeah, all like basically like in learning chemistry, stoichiometry was a real pain initially, but then like drawing it like out, with like so for the million shares, it's like shares is a unit, and then do that in parentheses. And then the other one is the price, so the dollar sign per share, and that's the free float market cap. Or no, so that's the price per share, and then so you cancel those out, and then yeah, you get that. So stoichiometry really helped me out, not necessarily with chemistry. I mean, it definitely did with chemistry, but physics. I like in physics too. I think I got a B plus in the class, or maybe on the final, and an A minus on the final, and I like disputed it with the professor. I just wanted to get an A on the final. This was a while ago, by the way, like 2008 probably, or 9 maybe, and I really just wanted an A on the final. But part of the reason why I was able to do good was because I'd have like my little worksheet of different equations that I could use. But if I didn't know the exact equation, it's just like, okay, well, what unit do I need in the end? Okay, I'm just going to use any of these equations that would take whatever unit I'm in and would translate it to the unit that it needs to be in. So that was always, I was very proud of that. Like units are really helpful. And unfortunately, they don't have like dollar signs or per share, but you just think about it. Free float is that many shares, and then free float of market cap, the free float, that many shares, and this is price per share. So then multiplying those, I've already done that. And yep, so cool. So I don't necessarily see any more requests. So what I might do is kind of dive back into some of these tickers that I've already gone over and just look at them in unusual whales. That might be useful for you guys, might not be. But I find it to just be very useful for, like some of them, qubits, I feel like I'm leaning more bearish on it, but there might be some signals in the unusual whales data that would suggest that is bullish. So I might actually jump over to that one. I might do that first. So yeah, qubits, I think it might bounce before it breaks down. With earnings coming up, this one might be pretty interesting. And do they have options? They do. So that is going to be useful. And so what I might do is go over to the custom flow. And so this is just going to be for all of the day, March 7th, and QBTS. So let's go over that here. QBTS. See, there were no trades with these filters, so that's just for the 7th. And so I might expand this to be over the course of the past week. Apply that. There were some $100,000 trades. These took place on the 3rd, the 4th, and the 5th. So that's Monday, Tuesday, Wednesday. And which ones were really big? And so over here it says they were neutral, or some bullish ones, one bearish one. What might be more useful is actually, these are 100,000, so what is the most premium, that we have over here? So the most is this one, $925,000. That's a put with the expiration for the 21st of March. That's a $7 put. Side none, so it's kind of tough to say which direction that's going to go in or which way that's leaning, but since it's in the past, we can get a little bit more information on it. So that was from the 5th. And so let's, ER upcoming, earnings report is coming up. Okay, and I want to have this on the 10-minute. Let's just keep those, or maybe I'll do 5 minutes. And so I want to adjust this to the 5th. And so we can see for this contract, I'm going to have Ed step out of the way. So this is the Qubits $7 put for March 21st. And so Qubits is currently trading below $7. So this is an in the money put. So yeah, what we see here for the data from March 5th is we see this one massive buy candle premium, $925,000, and we saw the total premium for this contract trading on the date, $1.678 million. And so from the 5th over here, we saw an open interest. Yeah, I mean, the open interest of these has just been increasing. And this strikes me as being, yeah, so just from a few days ago. Yeah, so we probably want to look at this one from the 3rd, because the open interest on the 3rd was 2,000, but on the 3rd, the volume was 9,000, which exceeds the open interest. So that would suggest that there are more positions that are being opened than were open. So it suggests that that's, I would think, more leaning bearish, but these orders seem to be getting filled on the neutral zone, no side. So that's kind of a little frustrating. But if we go back to, let's see, the 3rd, we can look at when open interest was 2,000 and when there was the 9,000 volume order, and open interest increased from 2,000 to 10,000, going up by about 8,000. So 8,000 of that 9,000 volume went into that open interest. So let's just look over here to the 3rd. And so we can see that we got that alert there. Volume has exceeded open interest. And that looks like from the data over here, we see the net put premium in red. That spiked up. So that suggests that those puts were being bought. You can't tell necessarily from over here because there's no side to it. You don't know. You see that the open interest increased, but that could be somebody who's bullish selling cash secured puts because they want to collect that premium. But we see this spike in net put premium, so that suggests, so it went from being negative to being positive. That suggests that those puts were being bought. And then from the 4th, we see net put premium actually coming down from the 4th. So that's kind of interesting. And then from the 5th, that's when we see this actually going down. So this could be some cash secured puts. I don't know. But let's just look from the Friday and then expand this to look at the past 7 days. And so, yeah, the 3rd had that massive spike in net put premium, but then maybe, that was over here and price went down. So maybe they were taking profits following that. Tough to know. But the open interest in this has just gone up. And this from the 6th, it looks like it was 100% bearish, but that's only $1,000. Yeah, so from the 3rd, 4th, and 5th, it looks like, over $1 million. It looks, if we look at this in the past 7 days as well, it's all very neutral, so it's tough to say. But this could be, buying puts on the 3rd, and then as price goes down over here, maybe they're selling cash secured puts or selling some puts. But I would find that to be, I feel like this is probably looking more bearish because open interest has gone up from 2,000 to nearly 15,000, over 20, almost 21,000. So it's nearly gone up by 10, by a factor of 10. And so that makes me think that, while price did go down here, they're probably expecting it to go down more. And this expires March 21st. So I feel like these are bearish bets around earnings. So, so these orders from the past, these are all $7 puts with the expiration of March 21st. So, yeah, this makes me think that this is all kind of bearish. So that does support my analysis over here of this coming down to around $3. Although those are in the money puts, so they're kind of safe bets. But yeah. So let's see. Okay, so Benjamin's following up with oh, you guys are doing math in the chat while I go over this. So cool. So, and you guys are talking about FLNC. So I'll just try to catch up on what you guys are chatting about, but it sounds like you guys are working it out together. So awesome to see you guys doing that in the chat. Super cool. Working as a team. So makes sense too that shares outstanding 180 million. So the shares outstanding 181.54 million. And okay, so let's see. I'm just gonna try to get you on this. My eyes are a little dry, so I might be a little squinty. Let's see. Yes, you got it. See, yeah. Okay, so the free float market capitalization. Yep, so you got that. Cool. Makes sense too. The shares outstanding is 180 million, so twice the free float. Oh, yep, that would make sense because then it's free float plus the, I guess, the restricted float from whatever's over there. If I have that, maybe I'm muddling what you guys have already figured out, though. So half the total share count is not available for... Yep, exactly. So that's what I was coming to. So Benjamin's saying restricted shares equals shares outstanding minus free float 181.64. Here it says 181.54, but I mean, close enough. And then so minus 90 let's see, 5 million equals 91.1 million shares. Restricted share market capitalization 91.1 times, let's see, free float market capitalization is so yeah, it sounds like back of the envelope math. It sounds like you guys have done more than that. But yeah, it sounds right. There you go. That'd be half. Yeah, so cool. Awesome teamwork. Awesome to see it in the chat. And then I will, since I just went over Qubits, I might go over Applied Digital to see if Unusual Whales is leaning more bearish or bullish over there. And so I'm just going to do, actually, I'm going to adjust this filter to be just Friday. And then I'll do Applied Digital to see if there's anything. So nope. But so I'll just adjust this filter to be the past week. Apply that. And so there were some orders on the 4th, so that would have been on Tuesday, that had a premium of over 100,000. And so it looks like more of these are calls. Looks like a $12 call expiring in January, 2 years from now. And then $8 and $7 call expiring at the end of the month. And then another $8 call expiring for the monthly July contracts. And then some puts for the end of March 6 and 7 strike. And then a $9 put for the April monthly. And so the one that has the most premium behind it, so let's look at that. There are actually two that are tied. One is a $7 put for the end of the month. That has a premium of $455,000. And the other one is a $7 call. Very interesting. Also, the size of these, all 5,000. $7 call also expiring at the end of the month. This seems like, I don't know if it's like, what are the different kind of strategies? The Condor strategy or whatever is straddling. This seems like, I would imagine this is the same trader. Also, you can see that these contracts were all opened up at the exact same time. 336.57 for all four of these. Super interesting. This is the $7 call that expires March 28th, the $8 call that expires March 28th, the $7 put expiring March 28th, and the $6 put expiring March 28th. All 5,000 contracts per per each of these orders. And the premium, ranged from. That's super interesting. I just think that this is a fascinating thing to be seeing. This seems very much like it's the same person placing the order. And so let's see this one. Man, what date was that? That was on the 4th. Okay, so looking at multiple days here, multiple days in the past. Got this big order here. It's a call. Let's look at the past 7 days. So on the 4th, we saw, this is the same person. Oddly, put premiums coming down. That order was at, what time was that? That was at 3:36, last half an hour of trading for the day. And so the past 7 days, we see this. That's pretty crazy. And so let's just actually adjust this to the 4th. And I'm just going to do 1 day here and 1 day here. Very interesting. So this is specific to the contract. This is all contracts. And so this is just like spread out so much. But, in the last, the last half an hour of trading, call premium goes up from about 357,000 up to closing the day at 610. And while net put premium comes down. So that's really interesting. So this is a $7 call from the 4th. And we can see that on the 4th, there was an open interest of $350, 350 contracts. The volume was 10,210. And the open interest increased by about 10,000. So it's like all this. And so that seems like it's all buying for the most part. It's about, 900,000. Majority of it being buying. We see that net call premium going up. Okay. So that makes me think this is bullish. And we still got open interest at 10,000. They could be wrong, though. People lose money. And so kind of the other side of that is this put premium coming down. So let's look at that. That's over here. 450,000. $7 strike. Also both of them $7 strike. What is the price at? 726. What was it on the 4th? The price was, opened below 7, closed below 7, but hit a high of 729. So pretty interesting. Here for this put, the $7 put that expires at the end of the month, 18 days from now. We saw, this open interest increase from that day. If I adjust this to the 4th again, but we can see that net put premium. So this tells me, this is all bullish. This is all bullish for Applied Digital. This tells me that this person was not only selling cash secured puts with the strike of 7, but they're also buying calls with the strike of 7, and they're also buying the $8 calls here. So let's see. Let's look at this from the 4th. No, maybe they sold these calls though. It looks like he sold these calls for the $7 calls, swapped them. And then let's look at the $6 puts. What did they do with that from the 4th? Looks like they bought those. So it looks like they kind of did some shuffling. So it looks like they sold the $8 call, bought the $7 call, and sold the $7 put and bought the $6 put. So they just kind of shuffled around. So they sold this at a premium of 455, and they swap that into this 455. Okay, so they take a short position and then they sell it. No, actually, because open interest went up for this contract. Yeah, so this is very interesting. This is a case study. Well, so let's see. So Loud Work is saying, I was just rounding 180. So yeah, you guys are talking about the other ticker. And so did the put premium go down because the share price went up? And so this was at like 330. So if we look at this 30-minute time scale from the 4th, so over here, in that, so this would have been at close, I believe. So share price had gone up leading up to that, but not like immediately. And so let's just look at this. Oh, for the 4th, looking at that. So we see that, leading up to, this is around 315. It had come down a little bit, but at 315, I'll put this on the 10-minute time scale. Over here. So right around here, I mean, price had already been up. And so price started to come down. So that would make me think that price is coming down. So that would make me think put premium would go up. And so that makes me think that for this contract, since this looks like these were on the bid side, and that put premium started to come down so this is 315. So right around here, price is coming down, not going up. And so I would think that somebody was selling those puts on this downside move, expecting price to be like that they were selling cash secured puts. Maybe I'm wrong about that. Yeah, especially the big red candles like that. Interesting. Yeah. So, and this is stuff that I'm still learning. And this is, like this right here, very, very interesting. Very unusual. I would think that this is somebody, let's see. I mean, so it seems like, because the open interest for all of these went up on that day. From the 4th to the 5th, open interest increased by 10,000. For this one, open interest increased by about 10,000. This one, same thing, by about 10,000. Because, there are going to be other people selling, and this one by about 10,000. So I think that, yeah, so I mean, you can actually, what I might want to just, maybe I just want to take a screenshot of this and doodle on it. So this is the, so this is super cool. I'm actually, let's see, so. I got this open up in preview. I can doodle on this. And so from this, because open interest went up on all of them by about 10,000. And so I would think, oops, I want to do this. This was a buy. Let's see, how can I? This was a buy. This was cash. That's a sloppy C. Cash secured. This was covered call. And this is a buy. And yeah, all very similar size orders. So that's super cool. So this, let's just think about this. They're buying the $7 call because they think it might go up. They're selling cash secured, or sorry, they're selling covered calls because they'd be fine selling their shares at $8. It's a cash secured put because they'd be fine buying at $7. And they bought this put to hedge if it goes lower around earnings. This is super cool. So you think because the number of contracts is the same, it indicates it's the same trader making the order? It just seems like it's a coincidence. I mean, it's just coincidence. It's the exact same time as well for all of them. So yeah, it seems it's unusual. You know, it's this, does that qualify as unusual? Whale? Hundreds of thousands? It's not millions, but that's super interesting because if let's say around earnings, if price tanks, they make money on these puts and they made money on these covered calls. But they might have to buy shares at $7 with cash secured put, and then they lose on this. And so if it goes up, though, they'd lose on this put. They'd collect the premium. Yeah, so, okay, well, I'll start over. If it goes down, they make money on these puts. If it goes down, they would buy shares at $7. If it goes down, they collect premium selling these covered calls and they still hold their shares. And if it goes down, they lose money on this. If it goes up, they lose money on this. If it goes up, they collect premium on this. If it goes up, they potentially have to sell shares at $8. And if it closes below $8, then they make premium on this. They just collect that premium. And if it goes up, they make money on this. So it just seems like a really nice, like a strategy to kind of play earnings. And so one could buy one of each of these contracts just to see, and it'd be effectively the same kind of trade, just, how do you to manage those trades. Yeah, so I think it's like they're expecting a big move either to the upside or the downside. And so I'm just going to save this to there. And I'm going to post this on X because I find it to be really cool. So let's see, put this in here. Very interesting trade. On 3-4 with looking like a buy of $6 puts, cash secured, sell of cash secured, $7 puts, sell of covered, maybe covered, let's see, $8 calls and buy of let's see, I just want to $8. Oh, I wrote this wrong. It should be a 6. $8 call. All 5K contracts expiring 3/28 with earnings on. When's earnings for them? Don't they have earnings coming up? I thought I saw earnings coming up. Oh, no, I guess earnings are not coming up. I was thinking about the other one. So earnings are not for this one. Earnings are for qubits. Yeah, okay, that's right. CC, and then I don't know if this will get any traction, but yeah. But let's see, those are all 5,000. But the open interest increased. That was half of volume for the day. That's super interesting. Maybe it's because, let's see. If I just limit this to the 4th there. So are those. Yeah, I don't know. But I think that they're, they're basically they're betting on a big move to either the upside or the downside, because if it's a small move, premium in all of them, the theta decays. But if it's a large move, whether it's upside or downside, they make money on it. Hey, what's up, Nameless? How's it going? I'm good. I was just diving into this very unusual data here from March 4th. I posted it on X, but it's just like these 5,000 contract orders all placed at the exact same time, being a buy of a $6 put, a sell of to open, so I believe that would be a cash secured put, $7 strike, and then I believe sell to open, so like a covered call, $8 strike, and then a buy of the $7 call, all expiring March 28th. So it just seems like with APLD, they're just expecting a big move to the upside or downside. And so, yeah, I'm doing good. I got a little drink here, so cheers to you, Nameless. Thanks for stopping by. I went over all the tickers that were requested, so I was just kind of following up on them in Unusual Whales, seeing if there's anything interesting. There's definitely something interesting with this one. And so I could see like, the spot. So the price for these contracts right now, 48.91, 53.91. You could just buy one of each of those contracts and kind of mirror this trade. And, you'd lose on one of them. Well, I mean, but you'd have to have, if the share price is 7, you have to have $700 on the side to be able to sell this as a cash secured put. You have to have 100 shares to be able to sell a covered call. So you can't really participate in these two in that sense, but these two, this is $48 here, and this one is $91. So, I mean, you could participate in those, one could, and yeah, I just think that's interesting, just trying to get to know Unusual Whales better, but I don't plan on participating in that. And yeah, I can definitely check out CPA. And cheers to you. I'll pull up my drink again. And then since I've been doing this for an hour and 40 minutes, I might close it down after Copal Holdings. Just because I got to get up for pre-market prep. I'm not working in the mornings this week, so I'll be able to do live pre-market prep every day. Yeah, so I'm just following up with the Applied Digital strategy. So Loudworks saying you'd lose on one call put, if it goes down, you'd lose on one call. If it goes up, you'd lose on one put, or you'd potentially gain the shares at 6 or sell the shares at 8. It looks like. So yeah, I mean, I think it's like this person probably has a bunch of shares at a price of around 7 or maybe 6. And so they'd be fine if those covered calls closed in the money at 8, would be fine to sell at 8. If the $7 strike call goes in the money, they make premium on that. If it goes above 7, they also make premium on the cash secured put, that going up, and they don't have to buy shares at 7 if it's below, but then they lose money on the put that they buy. So that seems like it's, yeah, but then you could switch all of that going the other way. If it went down, they'd potentially, like if it went down below 6, they make money on those puts, the $6 strike puts. They make money. They'd be able to, they'd have to buy shares if it's below 7 at 7. And then with the covered call, which is a strike of 7, then they'd just get their shares back if it's below 7. And the call for the $8 strike, they'd lose money on that. So yeah, I feel like it's like no matter what, they're expecting volatility to the upside or downside. You're right that it's fascinating data to study how to set up a single strangle or straddle. Yeah, so I don't know too much about strangles, straddles. I didn't even know strangle was a term. But yeah, that looks like it's a trade that, I mean, it's especially just because, I mean, the stock price is right around 7. And, just like all of these kind of wonky levels that I've drawn, and with the 200-day moving average right around 7, there's a lot of levels here. And so this could potentially get back up to this purple uptrend. And so they, do well on that, although they'd lose on the puts. But if it broke down like this, they're covered in that sense. So yeah, very interesting trade. That's one that I'd like to, I'm going to put it in my notepad. I just like to keep APLD. I'm just going to draw the eyes emoji so I know to look at it. Yeah, super interesting. It's unusual. And that's what Unusual Whales is good for. It's such a cool tool, and I'm just like slowly learning how to read the trades. And I think that we nailed that, what the person's strategy is. Volatility either to the upside or downside. Either way, one of their contracts will probably go to 0, but the other one will, compensate for that. Okay, but anyways, let's look at Copa. I'm looking at the daily. I was looking at shorter time frames earlier. And this one, what did I do here? I did something on the weekly. So this trend line below that I don't think it's really useful anymore. Oops. Did not want to do that. I think it's a better look the way that I adjusted that. So it's like, I had it like that for some reason. I think this is a much better look. So with that trend line, I can actually probably hug that close. And there's, one close below it here, but then reclaim, and then maybe I want to just do it on the lows there. See, it's the lows for both of those. The lows for both of those. The low here was 71.10, and over there 21.28. 71.10, 21.28. Now I'm just going to make that thicker so we can see it a little bit clearer. We're above that, so I think that looks good. We're also above the 21-day and the 50-day, which are both around 91. But the 21-day recently crossed above the 50-day. So if you have the shorter time frame going above a longer time frame, that's a more bullish thing. Whereas here you had, or is that more? Because the longer term, here the longer term, the shorter term crossed below, and so that's just like, a trailing indicator of this massive downside move here. And then you get this, and I think that this is an interesting example for just thinking about like the psychology of this. So what we have here, this trend line that I had drawn goes back, to the lows, the pandemic lows, March 20th that week. The low was 21.28, And then so we kind of retested it here, wicking below but closing above for that week, around 49 being the low there. And then the pivot point over here. And then so this is like, you know, a break of that trend line. So, hey, there's a little bit of panic coming down to the 200 days. So getting a bounce from that. So that, like, you know, makes sense. But this is also like from this move, this was kind of a surprise pullback. And like we had seen, yeah, I mean, the 21 day and 50 day have just been dancing around here. So it's like this is, you know, on this upside move, or so following this downside move, it takes a little while, 21 days really. I mean, if we measure that out from up to here to over there, it's 18 bars, so it's around 21 days. Makes sense that it take 21 day moving average that much time to cross below here. But then takes about 21 days, maybe 15 days. Well, for this to then cross above, that's 23 days. So, you know, give or take. And so this is like bearish move, followed by bullish move, followed by bearish move. Just waxing and waning, those crossing. And then so here we get this bullish move. And with that, we get this crossover that would seem more bearish. And then we get this pullback, and then this goes up. And so kind of following that trend with the 21 day being above, I think that there could be, you know, let's see, maybe we just kind of map this out. So like from the low here to the high, I'm guessing it's going to be around, you know, 15 days. So from the low here, I think this could be going higher for another week or two, because 15 days would be getting to the weeks, 15 weeks, dang it. So I think this could be going up for another month before getting rejected and maybe doing the same type of thing. But if we look at this is all on the weekly, so I'm more accustomed to doing stuff on the daily. But what we have here, I think this is really interesting. I'm going to delete this retracement or whatever, these levels that I have marked there. But, you know, so it's like over here, got this trend line, just like this is on the weekly, wick below but close above. And then this is the other pivot point. And this was a close below. So that seems, hey, kind of bearish. But then we bounced off that 200 week moving average. Get back above, wick below but closed above. This was kind of, you know, bearish over here. But let's see, what was the retracement, the Fibonacci retracement from here to up here? That was, you know, between the 618 and the 786. And yeah, and so what stands out to me is this downtrend here. This seems like it could potentially be breaking out very soon. I'm just going to do it from the high from the week that ended on July 28th, 2023, and then just going to intersect it with the high from the week that ended May 24th of last year. I think that by July, this will be, you know, either breaking out, retest, going higher, or breaking down, retest, and lower. So I think those are two options with this. This is on the weekly. Is there options with this? There are options with this. They don't look very exciting, but we can look over the unusual whales data. But yeah, this is a very cool chart. I'm glad I did it with these trend lines rather than with levels. I feel like, let's see, let's look at the, I'm going to flip back over to weekly just to see like what's the volume look like. It's tough. I mean, it could be going either one of these scenarios. I'm just going to color this. This is the green scenario, and this is the red scenario. And actually, maybe I'll do just more. Going with those colors. See, I feel like these are kind of the two scenarios there. Let's look over at unusual whales to see if there's anything that's stood out with CPA. And so it looks like there's some stuff. Let's see. I'm going to set the premium to 100,000. No trades with 100,000. This is okay. So 10,000. So we got a couple from Friday, the 7th, and this, there's no filter on the time range. And so these are pretty small. So for me, 50,000, 70,000, personally, I'm not making trades that big. The biggest trade I'd probably make is 1,000. So these are big for me, but I'm a pretty small fry. So I would not say that these are whale trades. These are more like manatee trades where they're not that huge. You know, a retail trader could be making these who doesn't really know what's going on. But so both of these are for August 15th puts, and it looks like they were sells, so that seems bullish because they were on the bid side. But let's look at these specific contracts. And so, yeah, we see that drop right there. And the open interest was 565, volume of 100 for this, 51,000. And so if we look back the past 90 days, this candle, interesting, was 100 volume. The candle that we just saw, 100 volume. And that premium, the premium for this, the candle premium, 60,000. The candle premium over here, 51,000. So maybe it's somebody cutting their losses, but it could be somebody else because, you know, there are other candles here that could add up to 100,000. Could have been, I mean, like, what's that green bit there? That's more than 100,000 because you see, or than 100 contracts because you see the line over here. It's more than the candle over here. So they could have been accepting a loss. But anyways, that seems bullish for CPA. But it's a smaller position. It's more than 1/5 of the open interest here. Is that, yeah. More than 1/5. Less than 1/5 of the open interest. But yeah, if we look over at the other one, also 100, it's the same person. And we can see that over here, 72,000. This one over here, candle of 101, 72,000, 72,000. So it might be somebody accepting that they were wrong. If we look past 30 days in the data over here, there's just not too much there, but this makes me think that, we don't know. This could be somebody selling cash secured puts, 85.90. And at these current prices, I mean, would somebody be interested in buying 100 shares at 85 or 90, considering that the price is at 94 right now? Yeah. Yeah. Based on current price of 94, buying shares at 90 or 85 is at a discount. And so they're selling these cash secured puts potentially, or they're exiting a position. And so we don't know if there's if open interest increases tomorrow from 565 for this contract, the $85 put, if it increases from 565 to 665 or somewhere around there, then that would suggest that this person sold some cash secured puts that they were willing to buy, really like 10,000 shares at $85 a share. But if open interest goes down to around 465, then it suggests that this person is exiting maybe a bad trade. Not sure. But it would suggest that they're, either way, if open interest goes up, I think it's less bullish than if open interest goes down. But yeah, I mean, in this one, open interest was 222, volume was 100. So if open interest goes up to about 322, then that suggests that they're selling cash secured puts, that they'd be willing to buy 10,000 shares, because 100 in the volume times 100 shares per contract is 10,000 shares at $90 a share. And so if price goes up, they'd be making money, the premium on these puts, which would be 72,000 for this one and 51,000 for this one. If price goes down, they'd be all right buying shares between now and August at 90,000 and 85,000. Something like that. I think that's kind of not necessarily a great trade because of the way that I had doodled this. If it does break down, maybe there's going to be a bounce around 85. The cursor's at 86.56. But then there'd be this bounce up to here to like 92, 93, then get rejected. So, I mean, I think that this could be coming down to that 200-day moving average around 80. So buying 100 or 10,000 shares at 85 or 90 at current price, yeah, sure, that seems great. But that would be with the assumption that this is going to, or the hope that this is going to follow the green line. But this could follow the red line. And then I would think that if that's the case, then the buy is at 80, not 85 or 90. So, yeah, I mean, hopefully that's helpful. I know I'm like kind of getting lost in the weeds with the unusual whales data, but I hope that's a helpful addition, complement to my technical analysis, which, nameless, I'm sure you recognize by now. My track record's probably 50-50. But yeah, I mean, I think, just looking at this, and I mean, you could make the argument, that this is an inverse head and shoulders pattern. It's kind of an ugly one, but you can make that argument. And this is on the weekly. You could also make the argument, no, you can't over here because this goes lower, but yeah, I mean, because you could just draw, a trend line going across here, and that would effectively be like the neckline. But yeah, I mean, this is potentially, cup handle. Look over at the daily. Yeah, I mean, this, oh, no, not really, because this is lower. but I think that this is, I don't know, stop loss level. Let's think about stop loss levels. If one's going long, maybe the stop loss level would be the low from the 4th, so from Tuesday. And so maybe that's, I'm not going to be paying attention to this one really too much, and I've been having a lot of alerts go off lately. But the low from the 4th was 88.01, so maybe I'm just going to put an alert at 88. And so if I were to be in a trade on this, maybe I'd want to have 88 as my stop loss level. Or, you know, and that, or maybe 87. Dividend was just paid, so that's interesting. But yeah, I would think that this is more likely to go to this upside trajectory than the downside one, but I could definitely be wrong. But yeah, I've been streaming for over 2 hours, so I'm probably going to sign off. I wanted to, if you guys are curious what I'm going to do, I'll take a sip of this and I'll tell you if you're curious. What I'm going to do after this, I am going to continue to watch Colin Gladman's video, just the market outlook. Some of the stocks I hold, some of them I don't, but generally I just feel like things could be bottoming, so I feel good about that. After that, just because it's short, I might watch, or I will watch Altcoin Daily. I have been watching those videos on a daily basis. Some of them I don't pay attention to, others I do. I'll be waking up in the morning to watch Crypto Rover's new video, but probably before I do pre-market prep. And if I have energy after Altcoin Daily's video, I'm going to check out Orlando's video here. Tesla, I hold. Actually, TSLL, I hold. I bought a little too early, though. Hood, I don't hold. I don't hold. BBAI, I do hold. So this is actually going to be a pretty interesting video. It's an hour long, though, so I don't know if I'll get all the way through it. I do want to get through Colin's video. And this, oh my God, I love The Last of Us so much. I just think it's such a beautiful, like the symbiosis of the, what's the kind of network that fungus forms in the floors of forests? Fungal network floor forest. It is a mycelial network, common mycelial network, or mycorrhizal network. I think that's so fascinating, and it's like you can think of it like related to fungus, but you can also think about it related to like the roots of trees, in that if there is like let's say a Douglas fir. Let's say there's a big Douglas fir, and then there's a little nub, a baby Douglas fir, and it's not able to get all the nutrients that it needs because it's small, it's dwarfed, whatever. This big, referred to as a mother tree, will deliver nutrients through the root system to that baby or dwarf Douglas fir, whatever kind of tree. Same thing with fungus. And there's these networks of fungus in forest floors that I believe symbiotically work with trees, work with each other. And so it's like the forest takes care of itself. And I view The Last of Us, as being just an analogy for that mycorrhizal network, for that nurturing characteristic of nature, whether it's fungus, whether it's trees, the forest. They come together and take care of each other. And Joel comes together and takes care of Ellie, or I don't know her name, I forget, Ellie. And so I feel like that show is just an analogy of, love and taking care of each other. I think it's so beautiful. I made a video about it. I really nerded out about it on my other channel that I don't really make videos for anymore. But yeah, I'll be watching all of that stuff. ENPH, I'll go over that real quick. And Loudworks saying, thanks, dude. It's a good study session for a Sunday night. I need to do more prep work, so I'll try to join these going forward. Yeah, sounds good. Glad to have you here. It was a nice, and also really nice to see the back and forth in the chat while I was doing other stuff. So glad you guys are able to support each other. And so in phase energy, I'll do it real quick because I do want to get to watching those videos, and it's kind of past my bedtime. This one looks like it got rejected from the 21-day moving average, so that's a little bit concerning. I'm just going to, clearly I got all these levels off, so I'm just going to delete all of them. But yeah, so I would look for a close above the 21-day moving average, whatever that is, it's going to change. But right now it's at 62.34. A close above that would look really good. A close above the 50-day moving average at around 65, that would look even better. But what I think is with this kind of big wick to the upside, makes me think that sellers or buyers are kind of getting exhausted up here. Volume did increase over the past 2 days. So that does make me think that, because volume increased the past couple of days, that makes me think it's a little bit good. But because there's a big wick to the upside, it looks like it got rejected from the 21-day. I feel like it's probably got to cool off. The MACD down here does look like it could be potentially getting ready to flip green or flip bullish. But there would need to be kind of a pump in volume to really get it to break out above these levels. And so what I could see happening is from where it closed, there could be a little bit of a pullback to around 58 or 59, see how that holds. And then maybe from there, MACD volume comes in, and then it does something like this. So I could see that as a possibility. But I feel like there's probably a pullback. Even if it's to continue higher like this, I think there's a little bit of a pullback. And then I would just want to evaluate, see how it responds to the levels over here around 59, 58 really being the lowest. But because there was this consolidation here, I could see a pullback, retest that before continuing higher. There's just not really that much volume behind the moves. The biggest volume was on this candle sell-off day. So that makes me think that there were more sellers here, and those sellers are not stepping in as buyers back at these levels. They got shaken out. And so maybe those buyers would start to step back in if we do get above the 21-day and 50-day. So that's what I would look for just like, quick little analysis there. And I might do just a quick little fib retracement to see what level that might be at. And I'm thinking that's probably like the 382. And so, yeah, pretty much perfectly being right there. So I'm going to color that light blue just so it stands out from that white level. So I would expect a pullback to 59 to 58 before potentially going higher. But if it starts to close below 58, I think it could be coming down maybe to 56, maybe to 54. I don't have the 50% retracement on there, but that would probably be around 57, 57.50. But yeah, hopefully that was helpful in the last minute, and then I'll just swig this at the end and try to get that cherry, but without the cube. So yeah, thank you all so much for hanging out. It's been a fun session. Enjoyed diving into that unusual whales data. And I'm going to try to use that in most of my videos just to better inform on my analysis. Whether it's a bullish or bearish thesis, does unusual whales data support that? And if it does not, try to understand that. And so that's going to be, kind of my goal. So most of my videos, I'll include going over the chart in the beginning. And then if you want to stick around to get the justification for unusual whales, that'll probably be in the second half. I think it's really cool stuff, really cool to learn. And I think it's a really cool service. And so hopefully my learning of it helps you to learn it. Maybe you want to utilize it yourself for your own analysis. But yeah. And Nameless is just doing a follow-up on EMF. Do I think it will hit 50? No. At this point, I mean, so for me, I think that it will go up like this, but I think it needs to check back between 58 to 59. If it does that, but then it starts to close below 58, I would skip the 50% retracement. I don't see any significant level there that it would correspond with as far as consolidation goes. I do see with the 618 this bit of consolidation here, this overlap in these candles. That makes me think that that might be a little significant. Also, there was a gap down to that level around 56. And so I think that would be acting as support. The lows over here were around 58. So if it breaks below 50, I would look for it to respect 56. If it doesn't respect that, in all honesty, I don't really see much significance to the 786. So 54. If it breaks 56, I don't see anything significant about 54. I think it would probably break that, and then maybe 51, 52 holds as like a double bottom. But then I'd want to be like really closely paying attention to that volume. If it breaks 56, I'd think that, yeah, then it could be going down to 50 potentially. It would, like right now, I don't think 50 is on the table. If it breaks 58, I still don't think 50 is on the table because I think 56 could hold as support. But if 66 breaks as support, then yeah, I think 50 is on the table. But that doesn't necessarily mean that it's going to 50. I just think it's, you know, a more likely scenario. Right now, I don't think it's likely at all. If it like 0%, let's say 10% right now, likelihood. If it closes below 58, I think that increases to 20%. If it closes below 60 and breaks, then I think that's getting to like 40+% likelihood of it getting to 50, but maybe it could form like a double bottom at 52, but like at 52, 51, then it's like 80% possibility that it could be going down. Actually, I don't know. Maybe it forms a double bottom. I don't know. It's tough to say, but I'd look for it to pull back to 58, 59. If it holds that, great. If it bounces, I think you're good. If it doesn't and it breaks, closes lower than 58, then yeah, 56. And if it loses 56, I think be prepared for 50. So hopefully that's helpful. So I just make old fashioned. So it's I don't know if you know how to make an old fashioned. I just a big ice cube, and but I make it with a teaspoon of sugar, and then 2 drops of bitters, and then I do probably like 2 fingers of bourbon, which I've been using Four Roses just because it's cheaper. I'd prefer to use Woodford Reserve. It's just more expensive, but Four Roses, I like it. 2 fingers of that and just stir it. And I kind of let it sit for like 20 minutes or so, half an hour before the stream starts, stirring it periodically. And then right before the stream, I put in orange peel, maraschino cherry, or not a maraschino cherry, Luxardo cherry. It's in like a fancy Italian cherry. It's like, I think like $30 a jar. So it's kind of expensive. But I think I had a good trade and I was like, I'm going to get the Luxardos. And so I got a jar. It'll probably last me multiple years, to be honest. So one of those cherries, orange peel, and then I dropped the cube in right before the stream. And old fashioned's my drink of choice. And to be honest, I don't really drink that much. I really just drink when I do the stream, have that one drink. But I was tempted to get a 6-pack of beer today because the weather's getting nice and I kind of just want to chill on my deck and have a beer. And so I'm going to have to do that. I might have to have a fire soon, get a cigar. I'm so excited it's spring, but it also means I got a lot of work to do outside and stuff. So tomorrow I'll be doing pre-market prep. That'll probably start around 8 a.m. Eastern, but I might be 5 to 10 minutes late starting it. I need to get to watching those other videos that I began. But yeah, I'll just throw this up again at the very end. If you haven't already, make sure you like the stream. Make sure you like the videos. I think it helps out the channel, bringing more viewers to it, helps out the algorithm. And if you're not already, make sure you subscribe. I do ticker requests live every Sunday, or if there's a holiday, Monday before market opens, the night before at 9 p.m. Eastern. And then pre-market prep, I'm trying to do every single day. The market's open before the market opens. And the tickers that I go over for that, I start with the UVIX and the VIX. Then I go over the SPY and SPX, go over Bitcoin and URA, which is uranium tracking ETF. And then I kind of go over a mystery ticker that just stands out to me as being of interest. But yeah, I'll see you guys in the morning for pre-market prep, and that might be the only video that I put out tomorrow just because I'm going to have to work in the afternoon and evening, and, I don't want to get spread too thin. Yeah, it's summertime. I mean, winter, though, I live in the Midwest, and it's super depressing because it's just gray, bitter cold, can't do anything outside. A lot of people, especially in so I'm in Iowa, a lot of people in Wisconsin, Michigan, there's a lot of alcoholism, especially because of the winters. It's the only thing to do. But not me. I have a different vice that is not, you don't drink it. And if I lived in a different state, maybe I'd be more open about what that is. But that's, it helps me clear my head. It helps me relax. But I didn't do that at all today, so I'm kind of proud of myself. But anyways, I'm gonna have to get a 6-pack for maybe cooking some meat on the deck, chilling on the deck, maybe having a fire, getting a cigar. So I'm excited about that. But yeah, anyways, have a great start to the week. I think it's gonna be a green week overall, so look forward to that. But of course, look for volatility. Trump is a volatile president, so do look for that.